Tonight's a question and answer session, so if anybody's got property questions that they want to ask, please feel free to ask away and I'll do my best to answer them for you. Right, so first question of this evening has come from Alex, and his question is, would you buy or do a deal on a holiday home on a lake? Alex, I do no money down deals. I do creative strategy deals. If I could acquire something that generates a rent profit that hasn't cost me anything to acquire, then I would go ahead and do it, as long as I'm sure about two things. First of all, the exit strategy, if I ever did need to exit from it, and two, that it is making a track record profit. Okay, there'd be lots of questions I'd ask. Would you buy or do a deal on a holiday home on a lake? Is it in the UK? Is it on a golf complex? What's the rentability? Is it abroad? I don't like abroad stuff because I don't feel secure with it, and I would want to spend at least 3 months minimum in an area or a country, learning the system, speaking to taxi drivers, speaking to restaurant workers and people that are on the street, as it were, to get the feedback for what's going on out there. I remember some time ago I was looking at buying a property, and not in Greece, but out that way. Where else is it? Out in Greece.
Turkey, Cyprus.
Cyprus. We're looking out in Cyprus, and I went out to buy somewhere, and I found somewhere, and it was really it looked all good to me. Properties were flying. There was hardly anything available, and so I paid £1,000 reservation fee for something, and went back out 4 months later. And when I went back 4 months later, I spoke to a couple of taxi drivers, and they said, yeah, it's been really weird. Just recently, there's actually houses on the market that you can buy. And basically one of them turned around and said that there's 7 times as many properties being built now as what there has been built in the last 7 years. And I decided to walk away from that deal. And fortunately that was just before the recession, so that all came from feedback from locals on what was going on in the market. So and I just went out there for 2 weeks just to finalise a deal as such. So there we go. Hopefully that's answered your question, Alex. Palmetto, Glenn, if you exchange contracts before end of March and complete later than the stamp duty freeze, still would apply, right? Yeah, Palmetto, my understanding is that stamp duty, what has to be paid is actually at the point of exchange, not necessarily at the point of completion. But I would double check that with solicitors. But I'm pretty sure that the stamp duty, and if you check on the government website on stamp duty, they'll tell you there whether or not it's at the point of exchange or completion. But I'm pretty sure it's the point of exchange, not the point of completion. Jason says, I'm looking at a detached property that has a flying freehold. Will this pose a problem when it comes to refinancing? Okay. I'm used to dealing with properties, semis or terraces that have got flying freehold, because what flying freehold is actually a room over the top of somebody else's property or over the top of somebody else's land. I would say that if there's a property and it had a bit overhanging somebody else's land, which sounds like what you're talking about, then your solicitors will make sure, and assuming that you've got access through your own property up to it, I don't think that will cause any problems. Obviously, I'm taking it to the ridiculous if your kids throw bits out the upstairs rooms and they land immediately below the window, and that's not your land. That's bottom line is what we mean by flying freehold. I don't know that it will be down when it comes to refinancing to surveyors' comments, and if you're buying it with the surveyors not creating any comments, you could check with the mortgage broker, and the mortgage broker could check with the business development manager about buying it. If you're thinking about buying it cash and then refinancing it later, perhaps it would be good to get an offer, but you'll have to pay for a survey just to make sure it's mortgageable, and it will also, I think, depend on what is in the deeds and what it says. So probably the best person to ask is the solicitor who's dealing with it, but also a mortgage broker to see if there's any issues. It's a good question, because some people just crack on and without taking into account what might be a problem in the future. Also, what's it over the top of? Is there a problem with what's it over? It's all a little bit vague, and it's hard without actually being able to have a conversation with you about it. But hopefully that answers your question. Michael Jones says, when people are on FBK with issues already covered here, e.g. tax relief, do you mind referring them to your website and listening in here? To your website and listen? Not at all. When people are is that Facebook with issues already covered here, e.g. tax relief, do you mind me referring them? Not at all, Michael, not at all. I'd be delighted if you referred people here. Here to try and help people to succeed in property and not to mess up. And hopefully you're getting benefit from listening to the webinars every evening. Ed says, what's everyone hearing about the current rental demand in the South East and London? Okay. My feedback is the dearer properties, and we're talking 6-7 grand plus per month in London, the demand's dropped. But in the surrounding areas just around London, the demand's gone up. So it looks like there's a higher end move from London to the surrounding areas. That's the only feedback I've had. The higher end estate agent that was on, maybe I need to get one of his letting agent friends or associates on to do a webinar to chat about that stuff. I don't think there's been any problem with surrounding London with rental. In fact, to the contrary, I've heard everything's renting out fairly quickly. And if anybody's got any feedback from anything they've been renting or anything like that, I'd be delighted if you could share it with us, please. And then Ed, I'll read out any other comments that anybody's. So the question was, what's everyone hearing about the current rental demand in the South East and in London? If anybody's got any feedback on that, please just type it on here and I'll read it out to everybody. And just remember, 5 or 6 little bits of information from 5 or 6 different people we can link together into important information. Right, okay, so Alex said, going back to the holiday deal home on a lake, he said it's a park home with a 20-year lease. I don't think they're leverageable, Alex, so I think you're paying money for something that has a rental income, and that brings me out in green spots and a purple rash. The thought of paying money for something, or rather than just 100% funding it, is a reality I don't like, and try and stay away from as much as possible when there's so much opportunity to be creative with stuff, and make sure that you are 100% funding everything you need to fund. So next question to you, Alex, would be, is it fundable? Can you take a mortgage or some sort of asset finance against it, and with the repayments, does that work out? Okay. Vishnu says, what have to make sure to do with JV partnership with good friends of mine? Okay, when you're doing a JV partnership, the most important thing, I think, good friends or not, is to have a JV agreement or a heads of terms where you list how you see the profit share, how you see the income, who puts what in where, and what part you're both to play in the actual deal. Most arguments come from a misunderstanding of a deal, so therefore a misunderstanding from where you both think differently to something that happened. So when you both think differently to something that happened, then that causes an issue and conflict. So if you can refer back to the original document and say, well, actually, look, this is what we agreed on. If that's you saying that to your partner's far more likely to go, oh yeah, okay, fair enough. And then there's no hard feeling. If you both have a disagreement on what you thought you put in and it's not in writing, then that leaves bad feeling, because you're both genuinely thinking what you thought is the right, what you're thinking is what you agreed. And most people fall out because of misalignment of what they originally agreed. So that's really important. Have a heads of terms and make it as detailed. It doesn't need to be done through solicitors, it just needs to be done as detailed as possible. So Joanna says, I've purchased a fully furnished 2-bed flat in Whitehaven, which is Lake District. I'm wanting to let it out as serviced accommodation, but would like to do it hands-free. Would you recommend booking.com as a starting point? Do you know, Joanna, it's not something I do. I have looked at booking out my mansion for weddings and for short-term lets, kind of like a serviced accommodation, renting out as a 9-bedroom place for people to take all their families for a weekend break. I think if you are miles away, and I don't know what booking.com does. I'm assuming that they handle the bookings, but do they handle the book in, the book out? Who have you got on the floor to make sure your place is immaculate when they go in? How have you got to check out when they check out? If that's part of what booking.com does, that's fine, but there are actually companies that, like holiday cottage letting companies, that may be a better bet for that area, and again, if you Google it, you'll find them, and yeah, I haven't done it myself, so I can't answer you specifically on that one. Jason says, right, it's on 2 title deeds and I want to split it into 2. Okay, look, Jason, I'm going to jump on here and talk to you a little bit more, because this is the flying freehold issue. Let me just go on to Jason. Hi Jason, can you unmute yourself and I can ask you a few more questions rather than speculating about it? If you unmute yourself, I'm happy to answer the question. There we go.
Hi Ben, can you hear me?
Yeah, got you loud and clear. So, my understanding at the moment, there's one property on one plot.
Yes.
That is all on one title. That you're looking to split it into two titles, but when you do,
well, it's actually already on two titles.
Right. Okay.
Hence the flying freehold. So it's a detached property that originally was two.
Yeah.
And the way the split is done means there's a flying freehold in there.
So, so if it was a detached, but it's now two.
Well, when I say it wasn't, I mean, what I mean is it's the whole property that I'm trying to buy.
Right. Okay. So you're trying to buy So you're trying to buy two properties on two title deeds that are adjoining, basically.
Well, it's being sold as one property because it's been used as one property for a number of years.
Right, okay.
But originally it was two properties.
Okay. All right, so my question to you is, although it's on two titles now, because you said it's on two title deeds and I want to split it into two, so you're buying it as one.
Yeah.
If from a mortgage perspective, and it's on two titles, you'll be buying it as two separate things, because there'll be two conveyancings going on. The solicitor will be, although you're buying both bits, they'll be buying both bits on two titles on the same day.
Well, it's been used as one property.
Yeah, no, I get that, but if it's on two titles,
right,
you've got to buy both the titles the day you buy it, yeah?
Yes, yes.
Yeah. So, and you'll probably have to get two mortgages for it.
Okay. So this could stop a normal buyer buying it then?
Potentially. I mean, if there's two properties and there's a flying freehold, I mean, I bought one and the loft, one of the rooms had a, what's it called when you have a hotel room that's got a second floor, like a mezzanine, yeah? So it had a bedroom with stairs going up to a loft area, and the loft area went across the other house. So it was a flying freehold. And it was already owned by somebody else. You've got a chance to, if you're going to, actually, you're not splitting it in two because it's already in two, but you can separate it in a way where there's not a flying freehold and get rid of the problem. Just because there's a flying freehold now, but you are buying two properties on two freeholds, you've got to treat it as you're buying two properties, and you can make it better when you split it, when you sell them both, yeah?
Yes, yeah.
So
the thing is, that as it's being used as one property, I can't find that they got planning to do that. So if it's on two titles, can I just split it back to two units without worrying about planning?
yeah, you don't have to split it back to two, it's already in two.
Yeah, yeah.
Okay, and if you're trying to take a mortgage on it rather than buying cash, any issues should come to light because of what you're doing. And the solicitors doing the conveyancing should bring anything to light, yeah?
Yeah.
Now,
I was going to try and get it on a delayed completion.
Yeah, okay. Well, if you can get it on the delayed completion and do the work, you're literally buying or getting two titles on both, or two individually on delayed completions, and turning it into two separate properties without a flying freehold.
Yeah.
That would be the ideal thing, and then there shouldn't be an issue when you sell them both.
No. But the only thing is the flying freehold, I'll have to slightly configure the titles, because the flying freehold means one property sits over slightly over the other.
Yeah, so you have to get the architects to do a drawing and submit it to land registry and change the layout slightly on it. and turn it back to a non-flying for two non-flying hold properties. But the most important thing to remember at the moment, it is on two titles, so you're not buying it on one mortgage. You know, you're buying it. You'd have to be buying it on two mortgages, or because you're doing a delay completion, you'll be doing two separate deals on albeit on one project.
Okay.
All right.
So then I could say bridge it and then look to sell it each unit individually. Yeah.
Right. Well, you'd be bridging it as two units, unless there's enough equity in one unit to, you know, bridge the full amount.
Yeah.
But bridging means you're not doing a delay completion.
Yeah. Well, no, I was going to do the delay completion and then look to if the vendor won't let me do the delay completion with enough time to settle it, then put it on a bridge.
I mean, because it's on two titles, if you do it on long enough time to split it into two and do away with the flying freehold properly, and that's an architect question, get them to do it, and then the solicitors just legalise it. Okay, but it's just the drawings that go on land registry on each title document that the solicitors would need to deal with. You're literally going to have two separate properties that you can bridge individually, or just one of them or both of them.
Okay.
And if there's enough margin in it, you could potentially bridge each of them separately on a 50% loan to value if you're buying it cheap enough, keeping the money down, or keeping the money down because you're 100% bridging just one of them and not bridging the other one.
Yeah. Okay.
It depends on the numbers, obviously.
Sure. Yeah, no, the numbers stack up quite good. I mean, what I want to do is do, because it's like a large chalet bungalow, so then put a dormer across the back, and then put an extension, and then, make it into two quite large properties.
Well then probably the best thing to do is to buy it subject to planning. And do it all in one if you're going to get planning to build the extensions, because it's two separate properties. You've got to get planning on both of them, and if you're doing them next to each other, it would be good to put them both in at once. And so just buy it subject to planning and say that you want to sort out. So that's the delayed completion bit, if you like, that, you know, you're going to put it right to put it onto one title, but you want planning to get an extension on it.
Yeah. Okay. And the fact that it's being used as one property won't be an issue in terms of...
It should. I mean, it double check with... because, look, if you were going to split it into one single unit, you would probably be able to do it based on established use if it's been split for a long while.
Yeah.
Okay. I can't think... I have heard before where the council didn't want people to split it back into a single unit, but that's not what you're trying to do, so I can't see a problem.
Yeah. Okay. All right. Yeah, no, brilliant. Thank you very much.
Okay, no problem. You're welcome. Ivan says, I'm about to remortgage a buy-to-let property. The 2-year deal is similar to the 5-year deal. Which one should I consider? There's the $10 million question, Ivan. Fixed. First of all, normally a 5-year deal will give you better leverage on the rent, okay, and the pay rates. So the first thing to consider is, on a 2-year deal, can you get a full 75% mortgage on it, or a full 80% mortgage on it based on the rent yield? Because the 5-year deal will give you a better pay rate. If it's fixed and it's based on the current interest rate, and you can get it for 5 years, then why wouldn't you? So I don't really have all the numbers put down, but it sounds like if it's exactly the same, why wouldn't you do 5 years? Because it's more likely to go up than down. So that's that one. Michael just confirmed that FB was Facebook, so yeah, thank you. Matthew said, do you know any banks, lenders doing bounce back loans that are taking new applications where we don't bank with them? I think Matthew, tomorrow Christos is going to be talking about sourcing, as we had lots of people asking about that. He could answer that question tomorrow, but I think at the moment it is HSBC who are considering taking people with bank accounts from different banks. And I know that, what's the company, one of the lesser known banks that have run out of money. Basically, some of the people that were applying there have jumped across to HSBC. Mick's replying to Joanna's question about the Lake District property serviced accommodation. So Joanna, if you're still listening, Mick says pillow partners do it all hands free for you for 20% fee. So have you tried them, Mick? Do you know anyone who has? Would they come across as recommended for Joanna to get in contact with them? So Joanna, hopefully that might help you a little bit. And we are getting close to the end of questions asked, so if you do have a question, please feel free to type it in now. I've got about 2 more questions to ask before I run out of questions. So Kimi says, with a rent-to-rent business, is it mandatory to have client money protection? I've noticed that some businesses have it while others don't. That if you're buying a property, whether you own it or whether you're, it's not really subletting, but subletting it, and people are paying deposits, you have to take a deposit, and when you take a deposit, you have to put it in a scheme. So you either put all of the deposit in a scheme, which I don't recommend, or you take out an insurance policy that costs an amount per annum from memory. So therefore you have to have it in one. Now, just on another note, Kimi, what I've done in the past is I've actually, rather than taking a deposit off people, I've sold them the furniture in the room. So, and offered to buy it back from them if it's in good condition when they move out. So that got me around the rents altogether. Some time ago that I did that, but that's how I got round the rents altogether. So hopefully that helps. Bev says, could I ask where you'll be looking for the properties for your overseas investors? I know you said you wanted so many out of a certain percentage return investment north. Does that include northeast? Asking as I live 1 mile from Durham and I know the area of County Durham. Bev, Durham isn't on my list of places that we're doing stuff. I do have somebody who is buying up there, and one of my clients is actually buying several hundred properties up there themselves. They've got a substantial amount of property to do it. So if you drop me an email and you're looking to do sourcing for people in that area, I'm sure that if you have a few decent buys, then they would be interested. So drop me your email and I'll introduce you, Bev, to the people that are buying in Durham. Teresa said, what do I do if HSBC can ignore my application and I can't get in touch with them? The company account is with them. I'd make an appointment to go and see them, Teresa, or I'd even go in and make an appointment to see them. I know everyone's very, very busy at the moment, but I know somebody waited 5 hours on the phone while the phone rang for 5 hours, and in the end they got through and they made an appointment. So I think it's very much at the moment a thing with persistence. Peter says, for a cash payment of $65,000 for a property, could I get a bridging loan of $50,000? What are the normal loan to values for bridging loans? The property is worth over 90. Right, so Peter, most bridging companies will lend you 75% of the purchase price. Okay, some bridging companies will lend 75% of value rather than purchase price, but at the moment I'm not sure of anyone who's doing that still. On the other hand, if you can structure it in a way where if you're buying at 65 grand, you have a third party take an option on the property for 65 grand, and they sell the option on to you at 90 grand, so therefore your purchase price is 90 grand, and that's on your application for the bridge, and when it completes at 90 grand, your nominee has option agreement says that anything over 65 grand goes to him. Your nominee then gets the difference between 65 and 90 grand in their account, and then your challenge is to work out how you can get that back without being in breach of the bridging loan policies. But that's how I would structure it. It's about structuring the deal rather than getting a loan to value, not loan to purchase price. Okay, we have no more questions on here. I'm going to give you another minute or two to put any more questions in, because we've still got officially another 5-6 minutes left to run. Or if we've run out of questions from the people on here, we can call it a night slightly earlier, which will be cool because it's been a very hectic weekend for me. Teresa said, are these webinars on YouTube? Yeah, Teresa, they are on YouTube. It comes under under Property Millionaire Academy. So if you go on to Property Millionaire Academy on YouTube, please feel free and please subscribe to it. So that'd be cool. That means you'll get notifications of everyone that goes on. So they should all be on there. And also if you could like them, that would be really good. And obviously if you've got any comments on anything, it'll be great for you to put them on, and we'll do our best to answer them for you as well. So I'm getting the person who's doing my camera work and putting all the stuff onto YouTube giving me a thumbs up, so I don't think I've missed anything off at this time. Yeah, double thumbs up, cool. Okay, so do I have a bridging contact that lends on value? Not at the moment, Faisal. There is a bridging company that I know that are setting up that will do it again, based on value rather than on purchase price. But right now, no. But if you're buying at a discount, we can get around it with the right strategy. Mick says, how do you get VAT back from a commercial property? Run that by the solicitors, Mick, your accountants. They will be able to help you. It's not something I've ever done, so I'm not familiar with the process. Trevor says, can you explain the loan to value as opposed to the loan to purchase price? Okay, so if you're buying a property worth 100 for 50 grand, normally you can borrow 75% of 50, even though it's worth 100. But if you buy based on value rather than on purchase price, then even though you're only paying 50 grand for it, you are borrowing 75 grand. So that's what I mean on that. Eric says, what strategy would you use for a £250 to 300k area, please? If you mean, Eric, that 3-bedroom properties are kind of 250 to 300 grand, like Milton Keynes, just type the name of the town, Eric, and I'll give you an idea. I'll come back and explain that to you. If you can get that done, and I'll come to you in a minute. Tayon said, which investment strategy would you do in today's market for a higher passive monthly income? Ty and I for the best returns on money in originally is probably a rent-to-rent business, which can be done in most towns. If you want to buy stuff, I'd be looking up north to buy somewhere. There's a big difference between different northern towns. Some are cheaper, and you can buy, do up, refinance and get all your money back. Some are slightly dearer and you're going to get capital appreciation. I would say very much make sure you jump onto one of my I running as of next Friday a 3-day Zoom course where I'll talk about all of the creative strategies. The 3-day Zoom course, Friday, Saturday and Sunday, of not this coming Friday, the following Friday, is a whole £97 plus VAT. It's amazing value for money, and you get to listen to all the strategies in all the different towns, and I would be able to go into details for you over them 3 days. It's not a 5-minute answer, I'm afraid, time. Eric says, thorough. Eric, the problem is, and again, it's something I'll talk about on the Zoom course next Friday week. Basically, that type of area is very hard. It's not cheap enough to do build up a cash flow, no money down. It's definitely not cheap enough to do no money left in, and recycling all your cash back out of it. And it's also not quite dear enough to do delayed completions, so it's kind of middle of the road. So office to resi conversions will probably work around there, and building blocks of flats, but that's about it for there. Again, if you jump on my 3-day Zoom course, I'll be telling you far more about it and why, and going into detail on that type of stuff, very detailed detail. David said we should use Zoom for these webinars. You missed the first 5 minutes and everyone go to webinars that take long to log in. How about, David, you try and log in at 5:02 then? Just a thought. And Zoom doesn't send the notifications out to everyone about what we're running every day. GoToWebinar is something me as a non-IT person has been using for a long time, and I feel a lot more comfortable than Zoom. Yeah, that's kind of why, but there we go. Andrew says, do you have a sheet of what works in which areas? Andrew, I don't. It's kind of in my head. It is based on the average purchase price at the bottom end of the market of 3-bed properties. And some strategies work in some parts of some areas as well. So you have to take that into account. David, I love that. So the question was, wish you could use Zoom for these webinars. Missed the first 5 minutes of every one. I said, log on 5 minutes earlier. He said, you're confusing me with somebody who's organised. Okay, David, I'll get that. I'm in your camp. So yeah, I love that answer. And Andrew says, what you should do, one based on square foot price. Andrew, yeah, noted. And I will bear that in mind. I've got a lot on at the moment and doing so that isn't the top of my priority list. I've got quite a lot of deals going through at the moment which I'm spending more time on. So alright, thanks very much for joining us, everybody. Tomorrow evening I do believe we've got Christos on, who's talking about sourcing properties for a living, and we'll help you with that. He's also a bounce back loan specialist. Don't really want to get into bounce back loans things tomorrow. He's here to answer any questions. I've had lots of people asking for him to come back and answer questions on literally on sourcing property for a living. So as I said, thanks very much for everyone joining. If you do know of anybody who is in property and you think would benefit from these, please feel free to drop them the link. More than welcome. Take care. have a very good evening, and I'll speak to you all again tomorrow.